Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for July 15th, 2018. Hope you guys and gals are having a great weekend and you know, it's summer trading, and with summer trading it is a little slow. Good news is the World Cup is wrapping up this weekend, so we don't have that to deal with going into this next week. But you know, the markets generally speaking are fairly slow, and that's going to lead me to a pretty big discussion point for this particular video. But before I do that, I just wanted to say, if you guys haven't signed up for ForexAnalytix already, please do so. It's only $1 for 10 days just to try it out. Once you do that, make sure you download the mobile application on the App Store or the Google Play Store, and you can get the tablet versions as well. It's always nice to have ForexAnalytix on the go wherever you're at. So make sure you try us out. Like I said, it's $1 for 10 days. And for those of you that are currently subscribers, I want to thank you for all your support with this venture. You know, it wouldn't be possible without you. So thank you very much. Now, let's talk about really quick before I get into what's happening this next week and you know what we can kind of look for. We had some pretty decent setups from last week, which we'll talk about as well. But you know, I've had a lot of discussions with some of our traders in our community. And by the way, if you don't know how to get to our community, you can just go right here where it says you have the little settings wheel. You can click to go over to. Well, I already have the chat room launched, but you go over here and launch the chat room. And once you get into the chat room, it's our private community with ForexAnalytix subscribers. But you know, I've talked with a lot of our traders this week about summer trading, and a couple things I want to point out is that the ranges are typically pretty tight, and a lot tighter than normal. Like in the fall and spring, winter times, you tend to get some bigger bouts of volatility in the markets. You know, the average trading range of the euro might be, you know, 80 to 100 pips or somewhere in that neighborhood. In the summer months, they tend to tighten up to, you know, 40 or 50 pips a day. Periodically, you'll get a big move, but you know, generally speaking, ranges are going to be a little bit tighter. So what that means is the opportunities to make money are a lot less. So therefore, when you're trading, it's important. It's so vitally important in the summertime not to get yourself into trouble. In other words, if a move is going in your direction, that's great. Try to take advantage of it. But if something's moving against you, it's so important to cut your losses quickly and not stick around, because the opportunities to make money are going to be a lot less. It's going to take you a lot longer to get out of quote unquote trouble, if you will. So you know, there's an old adage, and Dale Pinkert and I, we said it on the free face webinars this week. You guys should be listening to those every day if you can. There's an old adage that's been around way longer than the 20 plus years that I've been trading, is it's okay to be wrong, but it's not okay to stay wrong. So if you're wrong, fine, so be it. Cut your losses and move along. If you're wrong, don't think you're going to be smarter than the market, and you definitely don't want to be caught with the market going too far against you, because the opportunities to make that money back are going to be a lot less in the summertime. I hope that makes sense, and I hope you guys take heed of that, because it is. I've been in that situation so many times in my career, where I, you know, think I'm smarter than the market, and I stick around a lot longer than I should have, and then it just takes me a lot longer to dig out of that hole that I got into. All right, so let's talk about, first of all, this next week. So this next week, we don't have a lot happening. We do have one of the most important event I think of this week is going to be the Humphrey Hawkins testimony, which will be by Fed Chairman Powell, and that it will be on Tuesday. I believe Tuesday is the first day of the testimony to the Senate Banking Committee, and also to on Wednesday he's going to be talking to the House Financial Services Committee. So, but it's basically reiterating what he said. He'll just have different questions on Wednesday. But Tuesday is going to probably be the bigger day as far as the markets go. Now, if you look at the euro dollar, and I'm just going to show you the euro dollar for example, we're in a pretty tight range. You can see we're developing this little wedge pattern. It is a bearish wedge, so the 115 support, really resistance is 118, and we're mid-range. And as you can see on Friday, we actually closed with a weaker dollar. We had a nice little hammer on the euro, which should allow for some continued dollar weakness going into at least Monday, Tuesday. And you can see that across the board. It's not just the just the euro. Here's the pound, and the cable closed with a really strong hammer. There were some comments that President Trump made regarding Brexit, and he tried to walk him back. It was Thursday night, Friday morning, and the market shook that off by the end of the day. And we have like this inverted head and shoulder pattern, very messy price action in the cable right now. But you can see a slight inverted head and shoulder pattern. There's the two the two shoulders. Here's the head. Neckline's going to be up here somewhere around 133.50. But we've come out of ascending wedges, and the pound looks like it could lift some more. It's holding up relatively well, despite all of these headlines, Brexit headlines. And that's going to be one of the risks going into next week is we are still, I say we, in the UK, they're trying to navigate all these votes on custom union membership, and so there's a lot of headlines that drive the cable back and forth. I think what we should be aware of is that we are trying to carve out some sort of bottom here. I'm not really going to be convinced that the cable's going higher unless we get above this 133.50, 133.60 level, and then at that point I'd be a little bit more convinced. And I don't even know, based on what the dollar is doing against other currencies, I'm not even too sure if I'd want to play the cable to the long side. I might actually be more interested in playing the pound against some other crosses. Maybe shorting the euro pound would be an example. And let me just show you this chart really quick, and you can get an idea of why I would say that. The euro pound's got this downward sloping channel. We've hit the 78% retracement around 89 pence. We could very easily come back down towards 86.50. So I think the risk reward is skewed for a short here as long as we stay below 89. Like I said, I'm not really 100% convinced that I want to play the dollar short, being that we're in a trade war. You can call it whatever you want, but we're knee deep into a trade war at this point, and conventional wisdom would tell us that the dollar should strengthen in a trade war. But we're kind of in unconventional markets right now, so it's maybe the better trade, instead of trading the dollar, is trading some sort of cross rate, if the pound gets a little bit of a lift. But other things that are happening this week, we do have, like I said, we have the Humphrey Hawkins testimony. Canada on Friday, we're going to have CPI, which Canadian inflation data. Which I want to go into the Canadian a little bit deeper here in just a moment. But also we have retail sales on Tuesday here in the U.S. I guess I should be more in a calendar type of setting. Let's say we got Tuesday, we got retail sales. Tuesday evening, Wednesday morning, we have CPI out of New Zealand. Australia has their monetary policy meeting minutes on, that's Monday night. Tuesday morning. You know what? I just completely screwed that up. Monday is retail sales, not Tuesday. So Monday night will be CPI out of New Zealand and monetary policy meeting minutes out of Australia, and that'll be Tuesday morning in Australia. Sorry guys, didn't mean to mess that up. We have some on Tuesday morning, early in the UK. We have employment data, so that could be a mover as well, especially if you're dealing with the cable, which we were just talking about. Also on Tuesday, we have industrial production here in the U.S., capacity utilization, alongside the Fed testimony. On Wednesday, we have Powell's day 2 of the Humphrey Hawkins, but we also have CPI out of the UK and out of the Eurozone. We also have housing data out of the US. And on Thursday, we have UK retail sales. And then we have Philly Fed out of the US. And then on Friday, like I said earlier, we have CPI out of Canada, but also we're going to have retail sales out of Canada as well. So, but again, we're in summer, in the summer holiday, spirit. So don't expect huge moves, but I am expecting a few levels to be tested. Now let's go into just a couple of these pairs really quick. Here's the Aussie, and the Aussie. I'll tell you what, the Aussie's been trading pretty heavy, and that's a weekly chart. But let's go over to the daily. It's been trading really heavy because the trade war, if you will, is really intensifying between the U.S. and China. So the Australian dollar has been the go-to currency, which takes a little more of the brunt of the moves here to the downside. Now we are still, and we have been for the last few weeks. We've paused at this 127% extension of this big move that happened in December to January. We're holding the 127% extension, but while we trade below 75 cents in the Aussie dollar, I'm a little skeptical of further upside. But if we trade above 75 cents, that might be more of a game changer. In the Kiwi dollar, the Kiwi, we have to note that the Kiwi is also trading pretty heavy as well. But we are also below a pretty big, and you can't see it on this particular chart. Let me go over to the U.S. dollar, or the Kiwi dollar over here. We're trading below this big, or right at this big multi-year trend line, and that's a weekly chart. And you can see we're trading right at it, slightly below it, but basically on it. And the Kiwi is walking a fine line, in my opinion, between being bullish and being bearish. So you have to be a little careful with being long at this point, but also if you're short, there's a bit of a risk there as well. Now I want to take you over to the Canadian, and the Canadian. The reason why this pair is on my radar is because if you remember last week's week ahead video, I was looking to buy it as we dipped towards 130.50, which we dipped to 130.50 and we bounced. I did manage to play the dollar Canadian on the long side below 131. I got out actually on Friday at 132. 132.02 if I remember correctly off the top of my head, which was good. One of the key components of trading in the summer months is targeted trading, meaning that I am looking for a certain area to get in, and that's it. I'm not chasing the market around. I'm waiting for the market to get to my price and then getting in only there because I know the risk reward favors that particular position. That's how I felt when we dropped below 131 this week in the Canadian. Do I want to buy this currency pair again? Yes, I do. I actually would love to buy it back at 130 here. I think the 130 level would be a retest of this major trend line. You can see it right through here, this major trend line. If we got back to 130, I would play it on the long side. Now, as I was pointing out with the euro and the cable, we are trading with a little bit of dollar weakness tone going into Friday. So I think it is possible that the US dollar Canadian could trade back down towards 130 again, or maybe even sub 131 again before getting long. And and the reason why I also say sub 131 is because if you look at the dollar Canadian, these are my charts in particular. We have this trend line that is playing, and we could get back to the 131, 130, maybe 75 level. Any dip below that might bring some extra selling. Okay, but then playing it to the long side from there would make sense to me, if we could get down there. So again, if we can kind of drop towards the 130 level, I would be willing to play it there as well. So I think there's a couple areas to try to play the dollar Canadian on the long side. The other currency pair that I'm also pretty interested in right now is the US dollar Mexican peso. Now, I think you'd have to go back and I'm going to keep this green arrow. Whoops, I didn't want to do that. Let me get rid of that. All right, I'm going to move this green arrow for a second. If you recall, go back a month and a half ago, maybe 2 months ago, to the week ahead videos, and I talked about this big Gartley pattern. I said pattern, big Gartley pattern playing out. You can see the move to A, B, C, D, and we had a big reversal. Obviously, we dropped from 21 on the dollar Mexican peso all the way down to where we're currently at, which is below 19. Now, I think that we can head to this, and let me grab the where did my arrow go? Oh, well, that's all right. I'll put another one. I think we can get down towards the 1850, 1860 level before playing it on the long side again. And that's going to be a retest of this trend line. And also, you can see 161% extension and also 78% retracement. So any move from here down towards 1850, 1860, I think we could play to the long side. Now, let's also keep in mind we got past the Mexican election, and with AMLO as the president, he could be about as big of a wild card as President Trump. So, if there's any indications that maybe he may be willing to step away from the NAFTA talks, that could be very negative for the peso as well. But you also have to be on alert that any progress in the NAFTA negotiations would also benefit the peso and also the Canadian. So I think that if you're looking for entries like I am somewhere down here around 1860, or if you take the dollar Canadian towards 130, you have to enter and always keep tight stops, because if any headline comes out that's positive NAFTA or pro NAFTA, if you will, that should strengthen the Canadian and the Mexican peso both. So, what I'm trying to say here is if I do manage to pick up the dollar Mexican peso on the long side or the dollar Canadian on the long side, I will have pretty tight stops. And like I said, it's okay to be wrong. It's just not okay to stay wrong. So if you get into a trade, you get stopped out, so be it. You walk away from it and you look for the next trade. Last but not least, I should probably discuss the stock market. Stock market has been extremely resilient, extremely strong. We tested 2,800 on Friday. And this is the spike highs from over here in March. The S&P and the NASDAQ was at all-time highs. The composite traded to all-time highs. The stock market is extremely resilient despite these trade wars. Now, I do believe that the longer these trade wars go on, it's going to eventually erode into consumer confidence. It's going to really start to spike up inflation in months ahead, and it'll weigh on sentiment, and probably the economy, it'll start to be more of a drag on the economy eventually, as employers will start pulling in the reins as far as hiring goes. So I think that stocks look good right now. I just don't know how long it's going to last. And I think that if you are along the equity markets, you have to start realizing that, yeah, the S&P is really not following the market higher. The NASDAQ higher. The Dow also, is not following suit. You can see that the Dow is, struggling around the 618 retracement. It's not following the NASDAQ. It's really just NASDAQ leadership. So if the NASDAQ should turn, that could be a problem for the broader markets. So that's something that I really wanted to talk about. Oh gosh, I guess I need to mention one last thing. The dollar yen. Really big breakout in the dollar yen. Now you have to look at all dips on the dollar yen back down to 111.50 as being buying opportunities. I did get caught short the US dollar Japanese yen this week. I was short nearing this ABCD, and I was short around the 111 level. I did manage to get stopped out for a loss, and like I said several times throughout the week ahead video, it's okay to be wrong, it's not okay to stay wrong. So I got stopped out and I moved along. I took the trade because it was a multi-year trend line, But now that we're above that multi-year trend line, dips should be very well supported back down to 111.50 if we can make our way back down there again in the dollar yen. And I think that we have to be a little bit more skeptical about the yen moving in tandem with risk appetite and risk aversion. If we have risk aversion, I don't know how much the yen will be bought this time around. I think the dynamics in the FX market might be changing a bit as far as correlations go. So be careful. I'm not 100%. For me, I'm not 100% confident on what I'm going to do if the stock market starts to show some signs of weakness. It was a lot clearer in months past, but moving forward, it may not be as clear because we're dealing with a trade war, and that maybe being the reason behind risk aversion. So if that's the case, again, I'm not too sure how to approach that. Watch in the next week ahead video or in the daily face webinars that we do for free to get a better clue of how I'm feeling at that moment. But guys and gals, if you found this this week ahead video beneficial to you and it's going to help you into next week, make sure you click the thumbs up button, and also make sure that you click the little bell notification. This way you're notified when any new video is posted on YouTube, so you don't miss any of our great webinars that Dale Pinkert does with so many great personalities and money managers and traders and educators in the industry, which we have wonderful interviews all summer long. And thanks a lot for listening in. Make sure that you guys register for ForexAnalytix and try us out. Have a great trading week. My name is Blake Morrow with ForexAnalytix. Have a great one.